Welcome, traders, to another Tick Mill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and look at some potential action areas on the weekly time frame where we could see some swing trade potential develop, and we want to look then at the price objectives we can reasonably expect to achieve for the week ahead. Before we jump into the technical side of the picture, let's see what we've got in terms of macro. On the macro side, obviously, not quite as hectic as last week with the central bank bevy of central bank decisions. So as we head into this week, it's really stateside going to be about central bank speakers. We get Bowman tomorrow, and then heading into Wednesday, nothing of any note. We do get crude oil inventories, obviously, on Wednesday. Heading into Thursday, things pick up a bit. We have initial jobless claims, durable goods orders, and US GDP. And then we have a slate of Fed speakers with Fed Chair Powell, the notable speaker there. And then heading into Friday, we get the Fed's preferred inflation gauge, the US PCE price index. So, and we get core PCE obviously as well. So it's back end loaded in terms of data and speakers. So relatively tame start to the week. In terms of the technical setup, on a weekly time frame, we took out the prior cycle highs. Now, obviously, this is price adjusted with the front month futures contract. Now is the December contract. So that skews the levels a little bit, but we are trading at new all-time highs, and the technical setup now is for a potential test of the 127 extension of the July-August swoon that we saw, which would actually put us up now into the 58.94. That's the target zone. That also coincides with the 2 standard deviation extension to the upside for the volume weighted average price band. So that's going to be a key resistance target and a key price objective for the upside here, unless we start to see a reversal manifest pretty sharply here, whereby we would get a close back through the weekly volume weighted average price. So to flip that price bearish again, we need to see a close this week back through 56.21. So keep that level in mind. On the downside, with the upside target, obviously, that 58.90s. Moving to the daily time frame, from a range perspective this week, we are looking for a potential 1.14% move. That's what we're getting in terms of implied volatility. So that would take us up on the upside into the 58.30s. On the downside, that would see us test versus Friday's closing price, the just below the 5,700 handle. So those are key levels in terms of what we can realistically expect in terms of range for the week ahead. Like I said, that's going off implied volatility. Let's take a look now at the weekly plan chart, which is our 4-hour time frame, and the technical setups that I'm looking at as we head into the week ahead. The bull bear zone I'm using is 57.17 to 57.07. We could also use that 5,700 handle as well as support, but with the 15-point stop that I tend to use on these swing trades, that would encompass that anyway. So with respect to the bull bear zone, what I'm looking for is a 3-wave corrective move to ensue here versus the 57.81 swing high. We have a downside equality objective just below the weekly pivot at that 57.17. And so I'm looking for a test down into that area, watching for bullish reversal patterns there to engage on the long side to trade back through the corrected trend channel, projected trend channel, back through the 57.70s, en route then to test into that 58.30 upside objective. Also coincides with the weekly R1 as well. And then from there, as long as we maintain momentum divergence, I will be looking at bearish reversal patterns from that area to engage on the short side. Certainly be thinking about a move back down to test this high volume area on the 4-hour 30-day look back profile here, which will see us trade back into that 57.60s area. So decent risk reward scenarios to both the upside and the downside there. The alternative scenario, bearish scenario, would be that we didn't find support into that 57.17, 57.07. If we start to see a close below there, then we are going to be targeting a move down to test the high volume, the high value area for this 4-hour profile, which brings us into the 56.60s, 56.50s. Once again, from there, tactically, I'll be looking to trade to the long side to retest the bull bear zone from below. And then we will see if we find further rejection there for an extension to the downside to target the next downside objective, which is going to be this 56.30 to 56.20 area. So those are my price objectives and weekly action areas where I'm going to be looking to engage the market on the swing time frame. Obviously, intraday updates I will provide through the Tickmill Trader chat using the voice note function, as for whatever reason the Facebook community doesn't allow me to give text updates with respect to trading levels. They deem that to be against their community standards, which is strange. Anyway, that's pretty much where we're up to as we head into the trading week ahead. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.